warrant the growth scare that we've seen roil the markets this week? Guy, what do you say?
I believe it does. I think the growth scare is in place. This is sort of the icing, I think, or the cherry on top. But I'll say this as well. I mean, this is something we've talked about. As a matter of fact, it's great having Danny here because over the summer, June and July, Danny, Vinny, and Porter talked about make volatility great again. And they basically asserted that in Florida a couple months ago. And I'm of the belief that vol is going to be a story, not a one-day story, but a prolonged story. And quickly, in terms of the price action today, Karen probably was spot on. She thought, open on the lows, close on the highs, and that would have been a very encouraging day. Over the last half hour, the S&P gave back 80 handles. Now, we've seen rallies of that magnitude over the last 45 minutes a day. We have not seen really a sell-off like that, so something new is sort of in the cards right now.
Are we having fun yet? There's nothing that investors hate more than uncertainty. And between the new world and economic order that we're seeing in real time happen, it just makes it very difficult. Of course, tariffs are going to have an impact. It's going to take a while to play out. I'm sure some companies will use it as an excuse at various times, weather, tariffs, and things like that. But it's going to be difficult. I would just say that at the height of the market this year, we were trading at 23.5 times forward earnings. So we've only adjusted 1.5 times, basically, I think down to 22 times forward earnings. Historically, that's still a very expensive number. And with the uncertainty in the markets, it's probably validated.
Yeah, TD is already saying that all the tariffs that they remain in place to the beginning of August will add 0.4 percentage points to U.S. headline CPI. So in terms of the price stability that Peter Navarro promised on Squawk Box yesterday morning, even through the tariffs, economists broadly are not buying that line.
Mm-hmm. It was really interesting to see what happened to the 10-year. You talked about it at the top of the show. It opened at 4.11 or so, closed, I think, at 4.24. That's a pretty big move for a day that maybe you would have thought the yields might go lower.
Lower, yeah.
Right. So that's sort of interesting. But I think this, we talked about it a little bit yesterday. Part of what I think had the economy, people excited about the economy, was the animal spirits being released with no regulation or fewer regulations in a very pro-business environment. So this is throwing a whole bunch of wrenches into the mechanics of that. And so I think it does weigh on CEOs, particularly ones who are involved in, we talk about GM as an example of a complicated supply chain that's going to be difficult to manage with tariffs from Mexico and Canada and back and forth. So I also think that any company that reports now, it's free. Say you have, you don't know what it's going to be for the rest of the year. Give somewhat, moderated guidance. Be conservative. Why not? It's free.
Yeah, I would just say go back to 2018. We have the playbook here. The trade war that started back then, it never ended, right? It was predominantly focused on China. They put those 10%, tariffs in place. They've been ratcheted up throughout the Biden administration. Now we have an extra 10% on that. And you just think about how weak China's economy is right now. And you'd say, well, that could push them into some sort of trade deal. It's not particularly clear what the concessions we're looking for. Right. We want to actually export less, import more. I mean, we talk about this trade deficit goes back and forth or whatever. And I just think about the whole idea of reshoring. We thought about this throughout the pandemic and the post-pandemic. We haven't made a lot of progress. There's a lot of announcements about folks who are saying we're going to spend $100 billion there, $500 billion there. You know what? Let's see it all happen. Like, that's the other thing. So if I think about 2018, there were two very big bouts of volatility. Go back to Q1. What were we afraid of? We were afraid of, the uncertainty in and around trade. We had interest rates that were going higher, and then we had some growth fears. And then we got to Q4 of 2018, and all that stuff was still in place, right? So I think about this, like, they could kind of ratchet back Canada and Mexico. They're not likely to ratchet back China right now. And again, I think you're going to have a lot of uncertainty that just sticks with it. And we have an economy here and globally that really does seem to be hanging on right now. I'm not sure what the kind of upside is or where the inflection point would be for the economy right now. I just don't see it.